And I think it's time we go ahead and get started. And tonight we're having a conversation on understanding how to build your credit. And this is a third in a series. And tonight's focus will be on how to bounce back. And I will sign recover for that concept. We do want to thank CSD Learns and the Wells Fargo Foundation for providing the funding for tonight's webinar. Just some simple housekeeping. We are on Zoom today, and so it's highly recommended that you use a laptop computer or a desktop, not a mobile or cell phone. Those devices don't work too best for this webinar experience. If you would like to hear the voice interpreters, check your sound, make sure it's on. We do have voice interpreters. Also, towards the bottom, you'll be able to see a closed caption icon. You can go ahead and click on that icon and watch the captioning for tonight and be a part of us tonight that way. If you experience any technical issues or difficulties, go ahead and type into the chat box. We have a great team surrounding us here in the audience, ready to attend to your needs during tonight's webinar. If you see the zoom feature we're showing on the screen, it's a really neat feature that allows you to resize the look of your screen. So if you'd like to have a bigger presentation window or a smaller presentation window and have the bigger video screens or the smaller video screens, you can go ahead and click on those two lines towards the middle of the screen, and you can stretch it either way and adjust the screen to your liking. And again, the way to find that is you hover your mouse over the middle of the divide between the presentation, the PowerPoint, the share screen, and the video screens, and you will find those two little white lines there. You can click on that and set that up to your preference. Next slide. If you do have any questions, feel free to use the Q&A box. During my presentation, if you have something that you'd like to ask, go ahead, type it into the Q&A box. As I present, if the audience members see a question in particular that they like, they can upvote that question, which means that if a particular question gets more votes, it'll be reprioritized and in the queue so that it can be asked before the others. And so we can answer questions that way tonight. If, again, you experience any technical issues and need some help in that area, go ahead and do that in the chat box. You'll see that towards the bottom. There's an icon that says chat. And again, the Q&A has the upvote feature where you can ask your questions. And if the audience likes your question, you can vote it up and have it asked first. Also, we'd like to thank CSD Learns for giving us the opportunity to share this knowledge and this content that we will be sharing tonight. And again, we'd like to thank Wells Fargo Foundation for providing the funding for tonight's program. So thank you to both organizations. It is much appreciated. This next slide covers myself. I am Justin Folk. I'm the Vice President of Finance at Folk Williams Financial Management, Inc. And we have two social media accounts if you'd like to reach out to us. One is on Facebook and the other on Instagram. And you can see both handles on the screen, on the share screen, Folk Williams Financial at Facebook and Folk Williams on Instagram. If you have any questions for your personal or business, reach out to us. We're more than happy to serve you. Next slide. Tonight's conversation will be about how to recover in your credit experience. And again, the information we present tonight can be applied to yourself personally as an individual or to your business. Now, as folks I see are coming in to tonight's meeting, I just see them showing up. I want to reiterate that I'm going to sign how to bounce back, conceptually accurate as how to recover. So tonight's topic has to do with credit and getting it fixed. So grab your notebooks ready and have your pen and pencils ready to take notes from tonight's webinar. Once more, our goals tonight is to cover different ways to bounce back. Again, conceptually, how to recover from a low credit score and how to deal and communicate and understand your creditors as well. Quite often, many of us, our perspective of creditors or lenders is that we're timid, fearful, shy to reach out. And quite often, we just neglect that aspect of our credit and we try to find other, much more difficult ways that risk our relationship with those creditors and then end up risking our credit score. So, in tonight's conversation, we will talk about how to have those conversations with those creditors as well as review some of your rights as a consumer. Also, quite often, we've mentioned your credit report gets pulled, and there's quite a bit of information on that. And so let me summarize what's on there. Typically, you're going to find your full name and any aliases. Like, for example, about 6 years ago, I used a different name. I used J. And then I went to court, of course, and had my name changed. But on my credit report, J still shows. That's an example of what an alias is. Your credit report covers your lifetime, regardless of how many times your name may have changed. It'll still show up on your credit report. Your social security number, your current address will show up, and your previous address. If you're wondering why that's the case, I will tell you that quite often lenders or mortgage companies are very interested in knowing your rent payment history. And so they will take a look at that history and they will even contact those landlords or property owners just to verify that your payments were on time. And usually that's taken into consideration when they're making a decision as to loan you money or not. Other information that is on your credit report is your age, your date of birth, your phone numbers, even. And again, this is just to give you idea of the types of information that show up on your credit report. Now I'd like to discuss what the impacts are of having bad credit, or let's just refer to it as not so great credit. What are those impacts? I'd say there are four main ones, five to be specific. Now, if you do have a bad credit score, that means you're going to be hit with higher interest rates most of the time. And let me put this into play for you. Let's say at one point you did have a perfect credit score, but you missed a couple payments here and there, or missed some payments every now and then. Creditors, seeing that, will change your rating. And that rating being changed causes could cause an increase in the amount you have to pay back on your interest rate. That's why you want to keep an eye on that. Let's say in the future you'd seek to make further loans for more activity. Those options would be limited to you if you have that not so great credit. Uh, so the amount you can borrow will be reduced, and the interest rates at which you borrow at will also be increased, which will cost you more to borrow that money. So if you're purchasing a home or buying equipment for your business, it makes it much more difficult. And it's possible that your competitors have better credit rating than you do, which gives them a head start because they will be loaned possibly more money at a lower interest rate. So that's one of the ways that having not so great credit can impact you. So you would be considered to not have any financial power. And without that financial power, of course, you have less options. And it can be difficult to start your business or to find an apartment or to purchase a house or to find loans in a time where you're burdened like that and you need to find that money to borrow. So having a good credit score will help you weather those difficult moments in life that we all have to navigate. And also, uh, your insurance premiums can be impacted and your job hunt can be impacted. Now, just talking about a federal level and your bank, when they look at your credit score, a bank would imagine to themselves how they would be able to trust you with money from the company. If that's an employer, in that case, if it you reflect a bad credit rating. So it's very critical for us to maintain an optimal credit score and keep that. So the question now becomes, how do we bounce back from a bad credit score? Well, really, it takes a matter of paying back the money on time and making on time payments. Your payment history is a very important part of your credit, and setting up automated payments would make it much easier for you instead of having to remember to make payments and stress yourself out by trying to commit all that to memory. Why do that to yourself, especially when you have a business and a personal life? So it's best to set that up on an automated payment system or to set up auto reminders in your calendar that will remind you. When it comes to utilities and rent, it's important that if you do have a bad score, that you're typically hurting in the utilities and rent section. Remember the 30% below utilization rate. Uh, you want to stay 30% below your credit limit. So if you have $1,000 and you spend $700 and you have $300 credit remaining, and then thereafter your payments are, let's say, $30, and you still owe after a while $600, that is not a good utilization rate. So what you want to do is if you have $1,000 credit available, you want to spend no more than 300. And so if you pay that down to that you're only using 300, then you have that 700 left. That way you still have at least 70% available credit to you. You only want to use up to 30% of your credit limit. And keep in mind that's your utilization rate. I check my score quite often because we don't realize sometimes there might be an error made somewhere, and it might be something that can be resolved quickly and that will maintain an optimal credit score for yourself. Or there could also be a situation where that happens and it shows up on your credit report for a couple of years. Now, if that's allowed to linger that long, that would really tank and lower your credit score. If you have a bad credit score, how can you purchase a house? How can you purchase a car? How can you lease an office space? Your whole life can be impacted by your credit score, which is why, again, it's very important to check on it often. And also, it's important to become comfortable with your financial environment, mainly by driving the picture. Folks, I'd like to welcome a guest tonight, Janine Parker Greenberg. And Janine, please come on the stage with me.
Hello. Thank you for having me and welcoming me to this workshop. Hello, everyone.
Janine, thank you for being here. I'm looking forward to tonight's conversation with you about our experience.
So, again, I want to thank CSD Learns for hosting this workshop with Justin. And I would like to elaborate on my experience. I have 9 years of experience as a bank examiner at the Consumer Financial Protection Bureau. That's the CFPB. And this is a federal agency that was established in 2011 related to the mortgage crisis that happened in 2008 with Wall Street when they realized that bankruptcy was happening, and with the huge crash, it happened because there wasn't consumer protections in place where there should have been. So from that, they established very strong federal protections for consumers. And we work with banks and non-depository institutions, and we oversee many different types of loans to make sure that lenders are not violating the laws and the regulations that are in place. So I have oversight experience with mortgage loans, credit card loans, student loans, small business loans, and automobile loans. And we also have oversight of deposit accounts, credit report, and overdraft lines of credit. I have just uh, shifted over to August Federal Reserve Bank of New York as of August. And it's a smaller institution than the CFPB, but it really is my passion, the work that I'm doing now, to work with consumer product and advocacy for consumer rights.
Janine, thank you so much for mentioning that to us. It's very appreciated tonight that you are here. And with, glad that you're here on your journey with your experience to share your knowledge with us all. Thank you. So, we're going to start the night in our conversation with a poll. I'll go ahead and give you folks about 5 minutes to respond. Okay, that minute is up, and this is Justin speaking. Just want to check in and see if anyone got this right. So we'll move forward. Ah, I see there interesting results. 57% of folks said it's three credit reporting agencies in the United States, and the response is actually five. And the next slide will cover that, where we'll go ahead and list all five. So you can see there on the presentation, the most well known are quite often the first three that you see there. And then the fourth, Dun and Bradstreet, focuses on businesses. And the fifth, Janine, would you like to cover that?
Yes. So I have a little bit of experience with Dun and Bradstreet because specific to small businesses. I'll put a pin in that, but Innovis is really not popular. It's not used because there's so many different products with credit reporting Now, Equifax, Experian, and TransUnion, those three bureaus have developed many different algorithms. So they offer different banks fees to purchase depending on what is most interesting to them. For example, if a credit card company is, a credit card company wants to look specifically at your credit history with other credit cards, they don't want to know your mortgage information so much. Yet, if you're working with a bank, the bank will want to know how well you do paying your mortgage, and they may focus less on other factors. They'll want to know if you have specifically any mortgage foreclosures or any mortgage loans that were closed. Um, so with any, really the most popular are the first three mentioned. Those are the ones you'll see most often.
Thank you, Janine, for that. Also, I've noticed there's different responses amongst the credit reporting agencies. For example, with the first three, I will see something reported in Equifax, for example, but not the other two, like Experian or TransUnion. Why does that happen?
Well, it depends. We'll discuss this more later, but if something is incorrect on your credit report, it could be that, say, Equifax didn't realize that that actually did not belong to you and it instead belonged to someone else and they just didn't delete it. And that is something that can happen. But if the other two have a credit account that should also be on the third, then you can notify that third to add this missing information because that can actually help pull up your credit score.
Thank you for mentioning that, Janine. Next slide, please. We have a second poll for tonight. And that question is, where can I get my credit score fixed? So the question is basically, if it's starting to tank, what can I do? Well, we'll respond right after your responses first. Okay, we've passed about a minute here, and I sure am curious to see your responses and see how many correct answers we've gotten. Wow. Okay, okay. 0% voted banks, which is accurate. Banks will not help in that department. They're completely hands off there. Credit repair companies, or credit card companies, has a high percentage. Now, card companies usually are also hands off and aren't looking to help. However, they will provide references to where you can find that credit repair help at. Credit repair companies, not so much. And then Jeanin comes into that part. Uh, Consumer Credit Counseling Agency is the correct response, and that came in with 29%. Janine?
Well, this can actually be quite confusing, and you may not understand what the difference is between the two. Credit repair companies tend to be for profit, and that can sometimes be a scam because these are companies that will actually try to reach out and see if they can get access to your credit report where you have delinquencies. So they may try to persuade you to not pay off those debts and rather settle with these companies. So, for example, what they'll do is they'll contact you over and over again and send you multiple offers saying that they can help you resolve your debt. And that can be a scam because you're not really working directly with your creditors or lenders for your original debt. And how it really works is that they will tell you to just stop paying those creditors and to just send one payment to their company, and they'll continue to collect your payments and hold on to your money, and you'll fall more and more behind, and your credit score will definitely tank. And then when they decide that they want to pay it off, they'll say, no, don't worry about it. We'll settle for a lesser amount, which also will have a very negative impact on your credit report and credit score. Or consumer credit counseling agencies, they are typically nonprofit organizations, and they will provide some resources later for you all to see how to find and identify who has the appropriate credentials. There's a national certification for these types of agencies with qualified experts and individuals who will work directly with you and help you work with your the companies and lenders and creditors so that you do not fall behind or avoid paying off your debts, because you do actually owe them that money, but they can help you in some ways, such as, let's say you're stuck in a 20 to 25% APR interest rate. That's pretty substantial. And
That's
that
very high.
means, yeah, that's a high monthly minimum payment. So it's hard to get ahead of that. Really, all of your money will go to principal and not to interest to help cut down your debt. So that's why nonprofit agencies such as these can help you manage your debt. They can also provide you with different types of help that we can go more in depth into later on in this workshop.
I also think this is a good question to ask the audience because quite oftentimes myself, I ask my customers these questions and they don't have the right response. But it is the Consumer Credit Counseling Agency, and I look forward to further discussion on this. And before we do get moving, I want to share with everyone, if you have any questions that you'd like to ask regarding anything we've covered already, feel free to ask that now. You don't have to wait till the end of tonight's webinar to ask your questions. You can ask questions at any time during tonight's webinar. Type them into the Q&A box. Now, if you aren't familiar with typing in this setting, you can go ahead and ask us that you'd like to open up your video screen, and the team here will give you camera permission so that you can come up the screen and tell us your comment. We'd like everyone to be able to access tonight's program, so we are here and responsive in that way as well. Just wanted to remind folks in the audience of that. We're going to do some scenarios here for credit experience, applying them both as an individual and as a business. Now, before we get into that, I do want to show you this image that's on the share screen right now. You can see really it's from 0 to 629 is pretty bad. It's considered bad credit. 630 to 689 is considered fair, not perfect, but fair credit. Good credit starts at 690 and runs all the way to 719. And then from 720 and beyond up to 850 is considered awesome or excellent. People should be between 690 to 850. When you're in that range, you have more options. Not sure if you recall earlier, I said if you don't have a great score, it has a negative impact and gives you the problem of having limited options and high interest rates. Now, with the higher score, you have access to those better interest rates and you have more options. Now, there are also sometimes special credit opportunities for individuals that do have that max credit score. Okay, here's our scenario, personal or business. This applies to both. Let's say I have a 500 to 600 credit score and very limited credit history. What can I do in that situation?
So you would want to really focus on improving your credit before going forward with any other goals, which could wait until later. What you could do is take out a loan such as for a car or furniture or a personal loan, and you can ask someone that you trust to co-sign for you or to add you as an authorized user on their credit card. I do have to warn you, though, not to open multiple products or loans with different creditors at the same time because that will have a negative impact on your credit score. So it all depends. If you want to open an account, do that with just one and show some good payment history for a little while before moving on and applying for another one. Depending on what your financial goals are, you really want to make sure that you're following your goals at the end of the day and don't open accounts that you don't need or that you don't think will help your financial standing and help you meet your goals. Really try to make decisions that will fit your needs and your goals, which will then eventually help grow your credit score.
Right. And I'm wondering that portion you said not to open too many credit products. Uh, it's better if I have a lower number of loans than if I have, let's say, 10 or 15 different loans out. Is that what you mean?
Yeah, that's a good question because there really is no magic number. But let's say if you don't want to open three credit cards in the same month because you will probably be declined, uh, you'll be declined because other creditors will see that you're applying for that same product with other companies and that you're trying to open many at the same time, and they'll want to avoid you. You'll be a risk. If you're trying to open many accounts at the same time, it looks like you're in a panic. You're trying to spend as much as you can, which will really grow your debt. Instead, you want to be very careful and cautious and thoughtful in the process. And I can expand on this more, but as an example, when you go shopping for a car, you should include shopping for a bank or a lender in that process because there are different terms and interest rates that different banks can offer. And they also have different rules. So, my example really is related to credit cards specifically. I don't want to discourage you from shopping for different accounts. It's more about opening many accounts that will have the most detrimental effect.
Janine, that's a great answer. I know co-signing, when it comes to co-signing, that's also important for us to make sure that we have a filter and we screen ourselves whether or not that person's going to pay back on time, whether they're going to miss payments, or if they experience a bankruptcy, then that will impact us as a co-signer and also pull our score down. So, of course, you would want to have that communication with that person. And if something like that does happen, you want to disconnect from that person so that way you don't experience any impacts if that were to happen. Always keep that at the back of your mind. Moving on now to scenario two. Again, this could be someone with a 600 to 700 credit score, but with bad information on the credit report. And can we go back on the slides to the picture with the scores? Again, 600 to 700, it's right between fair and good. So just want to remind everybody of that. So let's look at the scenario now.
And focus on resolving any inconsistencies on your credit report. Like I explained a little bit earlier, if you have these three credit reporting agencies that have differing information from each other, you want to ensure that there's nothing strange on your credit report that does not belong to you or that in fact belongs to someone else. You also have, under the Fair Credit Reporting Act, you have a right to deal directly with the creditor to fix any issues. And if you don't get a response, there actually is a regulation that you can file a complaint to that creditor or lender or you can submit it through the Fair Credit Reporting Agency. It's a indirect dispute is what that's called. So there actually is a link at the bottom, and this will be available by email after this presentation, where you can see the steps, how they're laid out to file a dispute for something on your credit report.
Thank you. Great. Yeah, I also know that the and the interpreter missed that, but the information is there on the website. It looked like FTC is a good place to start. Moving on to the next slide. Scenario number 3. Let's say someone's got a horrible credit score because they have accounts that are in collections. What can they do?
Well, let me elaborate a little bit that we don't want to include credit score on this slide because really you could have collections with still, a good credit score. There's no specific number that you would have on your credit score to reflect collections on your credit report. So you want to make sure that the debt that's reflected is accurate and it is yours, and ensure that you will work to pay it off. You have a lot of options to deal directly with the creditors. You can set up a payment plan, which will help bring up your credit score as you're working on those payments, making those payments, because that shows good faith. You're showing progress towards the goal of paying it off. You're not just ignoring it. If you were ignoring your debt, that would be more of an issue. There's also two different strategies depending on who owns your debt. If you have not been paying your debt for a while, the creditor can actually sell it to a different company who will then take it over with collections activities. So if the original creditor contacts you, they can deal with you directly by writing or by phone or even email. Make sure that you keep notes and copies of all of your conversations with them to ensure that you are agreeing on the same amount of money that you truly owe. If you're working with a third party collections agency, there's actually a lot of opportunities for scams to happen in this space. So you can mail a written request confirming the debt, and you should also keep copies of that as well. There are resources available for you to review later after this presentation to see, if you need any more information. There's information on how to submit this. There's a website with a form and a template actually that you can use that uses the typical legal language that can help you through that process. Also, I want to let you know that medical debt is not as detrimental as other debts. Credit reporting agencies just note them, but medical debt will not have an impact on your score as much as other types.
Thank you, Janine. I think a lot of people are unaware of that. They don't realize that medical bills aren't that huge of an impact on their credit. So thank you for sharing that tidbit.
Yeah, so just to elaborate on this more, the Fair Debt Collection Practices Act, the FDCPA, um, under this act, you have more rights as a consumer than you do as a business owner with debt. A creditor is not allowed to harass you, yourself, your family members, your employer, or your friends. There's only a limited time during the day that they can try to contact you. And I have links with more information available as well in the resources section later.
Thank you again, Janine. And it's FD. Oh my, I can't even get it out.
Yeah, a lot of
FDCPA.
acronyms.
Whew, yeah, that's a lot of letters there. I think that we also need to be aware of two things. There's two different areas for rights coming in. Again, there are laws to help you protect yourself as a consumer, and we need to use those at times. Now, next question is, what if I don't have any credit? How do I build it?
Well, for your business, you would need to use your personal credit because that's how it really works. They would need to be able to review your credit worthiness, and in doing so, they'd look at your personal history. That's why, a lot of this workshop focuses on your personal credit and your personal finances because that will lead to your business finances and credit. So start with a small investment loan and build from there. You can also open a line of credit like a credit card if you purchase something every month, like Justin explained before. You can make purchases and just pay them off in full at the end of each month. And, you may have heard of secured cards. However, if you were to open an account with a credit card company and you would give them a deposit, let's say $200, and then they'll give you quote unquote a line of credit for that $200. And that's what you have available to use every month. And that's your maximum. You'd have to pay it off every month. And as you show your payment, your good payment history, they may raise your limit. And it also will open up opportunities in the future for other credit card opportunities. But just as Justin said, you have to be careful in signing up for these credit cards that you won't have a negative history that could have an impact.
Right. And like I mentioned, we've got to keep up with our personal credit score because that's the leading edge, our leading edge. And that's what we start with. And if you want to start a business and try to get a business loan, you need to have a good personal credit score. Without that good personal credit score, it's going to be difficult to start a business and even achieve loans in that. So you want to start leading with an excellent personal credit score. And now here are some various strategies for maintaining your credit in a positive rating, because you want to be in the good or excellent category. And some of these items are just paying your bills on time. Again, you can do that and achieve that through auto pay. Another thing is not having any checks bounce. Avoid that happening. And if you feel there's a situation that you cannot get out of and you're going to have a bankruptcy, try to avoid that because a bankruptcy will reflect for quite some time on your credit history. So you're going to want to avoid that. Also, keep your record clean, and that comes also your criminal record applies there because any items on your criminal record can be seen by vendors, and they're just not going to feel like placing trust in you if there is a criminal record existent. So keep that clean. Moving on down the list, I'm going to head down towards the bottom. Is avoid those title loans or payday loans, those types of loans. It's a huge recommendation from me for you to avoid those. I'm in California, and in California, we have many of those title loans or payday loans, and I just advise people to avoid those. Janine, do you have any comment you'd like to add?
I agree. In Pennsylvania, where I live, payday loans are actually illegal because they usually have above 35% interest. They're known as predatory. And so, yes, I would strongly recommend that you avoid them at all costs.
Right. Another thing I'd like to add is that if you can't make a payment to your credit, then don't use it. Put that on hold. Focus on aligning what you need to align in your life so that you can make those payments on time. Again, that's a big recommendation of mine. Now, I'd like to cover some resources, and we'll be sharing some with you next.
So, yes, NFCC, really, that's how you would find a certified agency who can help you And this is also how you would know you're not working with a scam. If they have these credentials, then you should be able to go directly to their website. And if the website has a .org address, that's when you know that it's actually legit. It's legitimate.
I notice we keep mentioning nonprofit organizations. Those are positive. If it's a for profit company, their endeavors are different. So you want to keep an eye out for that when you're trying to maintain your credit.
Yes. So the first resource here, as I explained earlier, if you want to dispute something on your credit card, I thought it would be good to add another resource in case you have an issue that's not necessarily tied in with your credit report, but it is still important for your financial picture or for a business loan process. Or maybe if you're having an issue applying for credit and you don't understand why a bank is not communicating something, or really for any reason, if they're not working with you, this is a really good resource, the Fpb Complaint. And this is something you can use when a bank or other institution or lender does not want to, because they won't want to get a complaint from this entity. Um, it's very important and even scary for the company to receive a complaint from the federal government. And so that actually is a great support for consumers. There are people who can work directly with you. There is a specific department within this bureau who can help you get your issues resolved. Also, Justin, we have the link for your free credit score report.
Right. I did have to look into that. As I mentioned earlier, there's a top three credit reporting agencies like TransUnion, Equifax, and you can run your credit report once a year. But with the pandemic that happened, annualcreditreport.com is a well-known location where all three repositories send their credit information. That website has decided to allow people to check their credit score on a weekly basis for free up until April 20th, I believe. And so that's something that you can all do now. Now, of course, the top three credit repositories have a membership that costs money that you can sign up for to see your score, but it's being offered for free. And most banks also offer you knowledge on your credit score for free as well, because they are hoping that you would like to keep an eye on it and maintain it in a positive note and be able to use their bank products like their bank loans and such. So make sure to look into both of those locations we just shared. Hands on banking is a comprehensive suite of financial educational articles, which would be beneficial to the group here, to individuals navigating through their financial life. There are tools there to help you guide you on your financial journey, again, in a personal or business sense. And there's a quote here that says financial fitness is not a pipe dream or a state of mind, it's a reality. And if you are willing to pursue it and embrace it, which means if you're not actively working with the information we just covered over the last 3 weeks, if you're not actively negotiating towards your dreams, you'll never achieve them. And so you're going to want to go ahead and work towards your dreams so that you could actually make the momentum to achieve them. So keep in mind the information that's been presented so far as you apply it to your financial life. Folks, now we'll go ahead and open up the floor to a Q&A session.
I've been reading, and there were two questions so far, and I think you've answered them both.
Oh, well, go
Um,
ahead, Janine.
For the repair company, it actually is the same concept as when you receive an email and it has information that you've never asked for. It's safe to assume that that is spam because you don't want to get any unsolicited emails if you don't know who it is or why they're contacting you or where this is from. It's better for you to contact that entity directly with the website and the resources that I provided, a .org from, make sure that they are, certified and have credentials. Also, when you apply for a home loan, banks will then provide a list of certified homeowner counseling agencies, and that's included in NFCC. So I hope I answered that question uh, accurately about spam that you receive. It's when you get emails that you did not ask for. It's always safe to assume that that's not coming from a good place.
This is Justin. Yeah, quite often it's not finance specific. It's general. Sometimes it includes taxes, income, and quite often any conversations about those specifics aren't going to be handled via an email. Usually they're via phone call. So if you receive a strange email like that, for your own security, even if it's a phone call asking for your social security number, that could be a scam and that could hurt you. So be careful with emails and phone calls too.
Right. You bring up a good point. Nonprofit organizations will never ask you through email or text or phone for your social security number. So you should know that and protect yourself. And then for the second question, okay, it says, can you please tell me what are title loans and payday loans for? Title loans are usually related to cars. If you have a car and it's paid off already, you can borrow money with your car as collateral, and that's a bad idea because typically title loans have very high interest rates and there really is no value. Your car is a depreciating asset, and so the value will always go down. It will always decline. It's not a good idea to take out a loan on a car if it's already paid off. And the second one that you asked about, payday loans, are typically used. Let's say you're stuck and you have no money and you're 2 weeks away from getting your next paycheck. The worst thing you could do in this situation is to go to a payday loan place. You'll see it as like cash loans on their signage. Typically, they also offer very high interest rates, but you have to pay these loans off within 3 or 4 weeks. And that may not sound so bad, but if you look, you have to pay, let's say you take out a loan of $100 and you have to pay $110 back. But if you look at that over the course of a whole year, that's a lot of money you'll have to pay back. And also, it really puts you in this cycle, a trap where you need to take out another payday loan over and over again. And before you know, you're going to be in a lot of debt and you'll just dig yourself deeper and deeper into the cycle. If you know that you have medical debt, then you should go to FTC, that website in the resources, and review how to confirm your debt. You want to make sure that this is a real collector and they really own this debt. You want to affirm your debt. And this website that I just told you about will provide you with the template that I mentioned before, which can also help you affirm your debt, the amount, also how much you owe in fees, late fees, and all of that information. All of that should be available on the website.
This is Justin speaking. I see another question that says, can you please explain why my credit score went up when I received a new credit card? I had never used credit before.
Um,
Go ahead, Janine.
yeah, well, I was going to say, I know Justin explained this scenario, I think last week, but as a part of your credit score, there are several different factors that are considered. One is how much credit is available to you. So when you open up a
Hmm.
new credit card, the amount of credit available to you increases, which helps to bring up your score.
And this is Justin. Also, to add to that, yeah, your credit score will rise a bit because you didn't have any credit. So you started at the bottom. So the fact that you got credit was an easy win. So that raised your score. So once you open a second card, the chances of that helping are 50-50. So, but with your first card, when opening that card, that will cause a little bump up in your credit score. Good question. Folks out there tonight, do you have any more questions for us?
Hmm. The answer to
Here,
this question,
well, Jenny, let me sign the question first. The question is, so I have a debt and it's been a year that I haven't paid. It's about $1,000 or more, and it's required to be paid back to a collection agency. Can I talk to the original creditor to get a lower payment on it?
it depends because it's possible that the original creditor has already sold your debt. I have heard sometimes that you can have it pulled back to the original creditor, especially if it's a medical debt. However, this second creditor is the one that you'll have to work with because if they own the debt, you need to work with them.
That's a great answer, Janine. Thank you. I'd like to wrap things up. We're going to have to move forward with tonight. And so we just finished our session titled How to Bounce Back from Bad Credit. Next week, we're just going to focus on moving forward. We will be reviewing the prior webinars and we will also be adding some further resources in next week's session. So, folks, we'll see you all next week, Monday at 7, and that's Eastern Time. I'd like to thank you all for being here with us tonight. And also want to thank Janine for coming in tonight as our special guest and sharing your thoughts and knowledge. Also, we'd like to thank CSD and the Wells Fargo Foundation.
Yes, thank you also for inviting me to be a part of this webinar as well. Thank you, everyone.
Good
Good night.
goodbye and good night, folks.